This meeting is being recorded.
Okay, well, welcome everyone. Good morning. My name is Carly Laxton-Oros, and I'm a manager of member and partner success here at the Toronto Region Board of Trade. Thank you for joining us this morning, working with our valued member, Toronto Regional Real Estate Board's virtual workshop, which we're focusing on GTA housing market insights, trends, forecasts, and strategies. This session is designed to provide you with valuable insights that you can't find elsewhere, ensuring you stay ahead of the curve in understanding market dynamics. I'd like to introduce Jason Mercer, who is TRREB's Chief Market Analyst, who will be providing you with data-driven perspectives and forecasts. Before I pass the mic over to Jason, I'd like to acknowledge this land on which we are meeting is home to diverse First Nations, Inuit, and Métis people. Though you could be joining us or watching from afar, the board's offices are located on the traditional territory of many Indigenous nations. They share with us a sense of responsibility for intergenerational equity, the well-being of today and tomorrow. Just a few housekeeping notes before we do get started. We will be opening the floor at the end of Jason's presentation for questions and answers. And there are going to be two ways that you can ask your question. It's either by raising your hand using the Zoom prompt, or by simply typing your question into the general chat. And I will try my very best to get to all questions in a timely manner, as well as in the order in which they're received. And now, without further ado, I'd like to pass the baton over to Jason to get things started.
Thanks very much, Carly, and to the rest of the Board of Trade. Really happy to be here today, and we appreciated the invite to talk to such a diverse group. You know, Carly sent the list earlier this morning of all the people that have signed up for the presentation, and it's great to see some familiar names and some faces here online, and certainly, you know, happy to see that we have people, you know, there's members of TRREB on the call today, but people, stakeholders across the real estate space with an interest in the GTA and broader GGH market. So Carly, just before we start, can you confirm that you can see the title slide on the full screen?
Correct. Confirmed.
All right, great. So what I'll do is I'll speak for about, you know, half of our time here today. So the next, say, 25 or 30 minutes, just sort of hitting the highlights of the GGH market as we see it. And, you know, I'm really hoping that, given that we got a large and diverse group here today, that we'll get some additional questions that can sort of build on my initial discussion. And so I'll jump right in, and I wanted to just start thinking about population growth, because if you think about the demand for housing in a region like the GTA or broader Greater Golden Horseshoe, it's really population growth that drives that demand, whether we're talking about ownership housing or whether we're talking about rental housing. And, you know, for the last decade or more, the real driver of population growth in the Greater Golden Horseshoe has been immigration. And in fact, you know, as we came out of the pandemic, certainly over the last 2 to 3 years, and likely for the foreseeable future, immigration is going to be running at or near record levels. And we can see the impact of that if we look at just sort of Ontario immigration. This reported on a quarterly basis, so a little bit more frequent than down to the regional level. You know, we've seen a real marked uptick as we move through 2021 up to where we are today, where, you know, we used to see about 30,000 you know, immigrants moving into the Ontario area per quarter. That's jumped up quite substantially to the point where we're seeing about 80,000 more immigrants per year in the post-COVID period compared to what we'd seen previously. And obviously all of these individuals and related households need a place to live. And that's even more important when we think about the dynamic of people sort of shifting, you know, from the rental housing market into the home ownership market. And just for a little bit of background, every year at the end of each year, TRREB partners with Ipsos to do some consumer survey work pointed at the housing market and underlying drivers. And one of the things we've been asking over the last number of years is whether, you know, people were born here that are responding to the survey, or whether they moved here from somewhere else. And obviously, when you start asking questions about housing to those two different cohorts, you do see different answers. And one of the things that we find is that while a lot or the majority of newcomers to Canada initially choose to rent the home that they're living in, ultimately, a lot of these newcomers, a lot of these immigrant households want to move into that home ownership market. And interestingly, they actually make that move from rental housing and into home ownership more quickly than households that are born here. And so, that's a significant finding when you're thinking about the demand for ownership housing, certainly as we move forward. But it's also, interesting to move beyond just immigration. And certainly if you've been reading, the newspapers, or certainly been listening to talk radio or what have you, a real topic of conversation that's come up over the last couple of months, just based on new data that was released by Statistics Canada and analyzed by, a number of different organizations, is this notion of movement out of the city of Toronto or traditional sort of GTA boundaries, both to other parts of Ontario, other parts of the Greater Golden Horseshoe, but other parts of Canada as well. And so it's important to look at that, or look at population growth, not just through the lens of immigration, which is the key driver of population growth in the GTA and surrounding Greater Golden Horseshoe, but then also what happens to that population over time, and where people are going to be looking for housing, and why we're seeing sort of a shift in that dynamic. And it's important because when you think about a region the size of the Greater Golden Horseshoe, about 10 million people, 21,000 square kilometers, give or take, there's a lot of different forces at play that sees people move even intra-regionally. So say from, the city of Toronto to another part of the Greater Golden Horseshoe. And that's not something new. We've seen that for a long time, as far back as my days at CMHC, and I know there's some past colleagues from CMHC on the call here today, where you did see that sort of movement where initially newcomers may settle in the city of Toronto and immediate surrounding municipalities, and then look elsewhere. But I think what's notable is over the last number of years, we've seen sort of an uptick in that migration to some of the outerlying areas within the Greater Golden Horseshoe. And so we can kind of see that here. So if we think about immigration, both in sort of the pre-COVID period, but then also in the post-COVID period, the immigration patterns and where people choose to settle initially within the Greater Golden Horseshoe have remained, somewhat similar. So this map is showing the pre-COVID period. If we search for the post-COVID period, you hardly notice the difference. Because in fact, a lot of newcomers are choosing to settle, the great majority, or majority at least, within the city of Toronto and PO region. And just flipping back again, pre-COVID, post-COVID, that relationship really hasn't changed that much. What's interesting though is when we move beyond just looking at immigration and start thinking about sort of net population growth within the different parts of the Greater Golden Horseshoe. That's when we start to see, a shift that's really occurred, and it's been well documented, as I said, in the media and in analysis and reports that we've seen over, say, the past year or so. Where in the pre-COVID period, you're still seeing, substantial net population growth, whether you're talking about immigration, people moving into the GGH from other parts of Canada, or certainly moving around within the region itself. There's still sort of a focus on those sort of core regions making up the GTA. Well, that's changed as we moved, out of the pandemic, where we're seeing, more of a focus on the Greater Golden Horseshoe in those surrounding regions that make up the GGH versus the traditional city of Toronto PO region. And so what that means is that initially we're seeing people certainly settle within the central core of the Greater Golden Horseshoe, but then they're looking further afield. And how the housing market has evolved over the last decade or two goes a long way to sort of explaining that intra-regional movement, especially, from those core areas or traditional areas of population growth in the GTA, further afield throughout the rest of the GGH. And so this chart kind of plots out trends for GGH home sales in a couple different ways. over the last couple of decades. And certainly we can see, we've had some peaks and valleys. We've seen a couple of housing market cycles over that period of time. Certainly back 2016, 2017, was sort of the previous record period of time. And then looking obviously as we move through the pandemic and out of it, we saw another record year in terms of transactions back in 2021. Obviously, as we started to see the Bank of Canada hike borrowing costs in 2022 and into 2023, that had a real marked impact on the demand for ownership housing. And we see both in the traditional GTA area and then the outer lying areas of the broader GGH, we did see a downward trend in home sales, and that makes sense. Obviously, a real marked and accelerated uptick in borrowing costs had an impact on the demand for ownership housing. It had an impact on affordability. If you look at the bottom panel, though, on this chart, the other thing that we've seen over the last decade or so is a growing share of transactions through TRREB's MLS system being accounted for by regions outside of the traditional Greater Toronto area. And again, I think that just speaks to the trend we've seen in terms of, inter-regional movement. That as, the housing market has become tighter, as we've seen more of a constrained supply scenario in the marketplace over the last decade to decade and a half, we're seeing stronger upward pressure on pricing through 2021 and the first quarter of 2022. And what that meant is that, people wanted to move to the GTA and broader Greater Golden Horseshoe to take advantage of the diversity of employment opportunities, the cultural diversity that we've all taken advantage of over the last couple of decades. But what they're finding is they obviously had to look further afield to find housing that was affordable. And obviously, as we move through the pandemic and we started to see more ability to take advantage of work from home or hybrid work, obviously that even further perpetuated that ability for some households to move further afield to find the type of housing they needed, but also be more affordable at the same time. And so that goes a long way to explain why, we've seen that uptick in TRREB MLS system sales outside of the traditional city of Toronto and even GTA area, more in favor of that surrounding Greater Golden Horseshoe. And it makes sense that people are chasing that affordability, at least to a certain degree, by sort of shifting the geography, shifting the area of their home search. And more, again, as we've had Ipsos undertake this polling, we've really started to see, housing and housing affordability as a topic of concern really sort of climb the list. And so many of you may have seen presentations by Sean Simpson from Ipsos, but he always points out that, first and foremost, when you ask Canadians, what's top of mind, especially as you go into an election, you're thinking of public policy and what people think other elected officials, the policymakers should focus on. Healthcare is always top of the list. And it remains top of the list now. But a very close second, and it's been climbing that ladder of policy concerns for average households across the country, is housing. And if you look at the top four really on this list, housing, interest rates, the economy, those three, they're all intertwined, right? Because number one, the great majority of people are purchasing a home through the use of a mortgage. And so obviously interest rates and how their relative level impacts people's monthly payments, that's key. And then obviously number two, interest rates aside, you need to have a job, you need to be able to gain and retain employment over the long term in order to make those monthly mortgage payments. And so it's no surprise then that housing in general and those sort of underlying drivers are really top of mind for people when you're asking them, when you're getting a sense as to what consumers are feeling in the marketplace. And so another question we ask people when we're undertaking this survey through Ipsos is, are you intending on purchasing a home over the next year or not? And if they say no, obviously we ask why. And definitely over the last couple of years, we've seen more people, focusing in on affordability. Quite simply, they can't afford it. They'll say something like it's too expensive to buy a home, interest rates are too high. And, through that same lens, high borrowing costs, you also start to think, or people are thinking about more uncertainty around the economy. And we've heard, more and more discussion about that over the last couple of months because there's this give and take, of course. So first we were asking ourselves, well, when is the Bank of Canada sort of reaching a top in terms of interest rate hikes, and then obviously what are they going to need to see in order to see interest rate cuts? And one of the things, of course, is looking at the labor market. Where we're thinking about, is the labor market slowing down? Are things not quite as tight as what they were in the past? And so is that going to provide some relief on the wage growth front, on the inflation front? And we're starting to see that, but it's that give and take. Whereas on the one hand, people want to see lower borrowing costs, but on the other hand, obviously, the high interest rate environment that we're in right now has also impacted the labor market and broader economy as well. And so, as we've seen that sort of drop off in sales activity, that temporary drop off in the demand for ownership housing, largely as a result of much higher borrowing costs today compared to what we saw back in 2021 and the first quarter of 2022, obviously the market has had to adjust. And so we've entered into this period of time where, sales are running about half of where we were, say, at the peak in 2021, yet listings remain quite high. In fact, we've seen an influx of inventory in some segments of the market, including the condo market, over the last year and a half or so. And what that means is that for people who are active in the market today, who are looking to make a purchase, a home purchase, they're benefiting from a lot more choice. And so at least temporarily, gone are the days where we'd be seeing a number of different households competing for a given listing. People have a lot more choice now. So they know that in a given neighborhood, if they can't get a deal done on house A, they likely have house B or C that's similar to what they're looking for as well. And so it gives them more negotiating power. And as a result, we saw a downward trend in pricing between 2022 and 2023. And even as we started to see the Bank of Canada cut their policy rate, and we've seen negotiated mortgage rates on the fixed side also start to trend lower, we have continued to see prices remain somewhat flat and off that Q1 2022 peak. And that makes sense. Because even as we start to see more demand in the marketplace, as interest rates trend even lower, it's going to take some time to unwind or absorb that increased inventory that we've seen in the marketplace or build up in the marketplace over the last 18 months or so. And so there'll be a period of time at least where people are going to be able to benefit from not only lower borrowing costs, but continued negotiating power, because there's going to be a substantial amount of inventory in the marketplace. And just to give a sense as to the impact of these interest rate cuts that we're expecting to see now flow through the end of 2024 and certainly through 2025 as well. And all I've done here is I've just said, let's imagine that we're purchasing a home for $1 million. We got a 20% down payment, 25-year amortization period, and a 5-year discounted variable rate mortgage, right? And so we see where we were at the left-hand side of that chart before the Bank of Canada started cutting rates. The blue bar is where we are now. So there's some savings there, but not a ton. But obviously those savings start to ramp up, by the end of this year. If we continue to see cuts, we'll have carved off about, $400 or $500 off that average monthly payment. By the end of next year, potentially, we'll have carved off the better part of, $1,200 or so off that monthly payment. So that's starting to represent some substantial savings that households would be able to deploy for other goods and services that they need to purchase. And when they start to have more of that flexibility, you're going to see more, would-be home buyers that have been sitting on the sidelines over the last couple of years, more interested in sort of moving back into the marketplace, starting to look harder at making that home purchase over time. And as I said, at the same time, they're going to be benefiting from, a substantial increase in inventory over the last year to 18 months or so, especially within the traditional GTA. Whereas, new listings over the last year or so, and this is new listings through July, so we're kind of doing an apples to apples comparison from a time frame standpoint. We haven't seen as much movement in new listings in that sort of surrounding or outer ring of the Greater Golden Horseshoe, but certainly in the GTA and particularly in that condominium apartment segment, we are seeing a real increase in inventory, a real increase in new listings, and that'll be important, as we start thinking about an important cohort of home ownership demand, and that's that first-time buyers category. But it's important to sort of think about, what does this mean? I mentioned earlier, we had this sort of growing separation between the demand for ownership housing or sales of homes versus new listings. And so I want to plot that out in a little bit more detail. And so what I've done here is, if you look at the top and bottom sort of panels here on this chart, the top in the blue is the GTA, and the orange is just that surrounding region that makes up the rest of the Greater Golden Horseshoe. And so the bars is just annual change in selling prices, and the line is the sales to new listings ratio. And so again, this is just another way of sort of looking at that relationship between demand and supply. And so as that sales to new listings ratio trended lower over the last couple of years, a lower trending or downward trending sales to new listings ratio just suggests that, again, buyers are benefiting from more choice in the marketplace. And that's when you start to be able to get more aggressive on your offers. And by and large, during that period of time, you start to see a downward trend in home prices as well. And that's what we've seen. So again, as buyers start to take advantage of lower borrowing costs over the next 18 months, they're also going to benefit, at least initially, from an uptick in inventory as well. And so, as I said, one of those buyer cohorts that will start to be more and more of a driver of home ownership demand moving forward is first-time buyers. And when we do the polling with Ipsos at the end of each year, we are asking, are you planning on purchasing a home over the next year? And if so, will it be your first home? And it was interesting, like even at the end of 2023, it wasn't sort of the lowest share of intending buyers that we've seen, since 2015, since we started doing this polling. And so I think that was in anticipation of lower borrowing costs to come. And so you're still seeing a substantial number of would-be first-time buyers saying, look, we're at least somewhat entertaining the purchase of a home over the next year. And I think that share will increase further when we do the polling again at the end of 2024. When we're asking again if first-time buyers are intending on purchasing in 2025. But by and large, first-time buyers are looking to see more relief on the borrowing cost front. And so what we're asking is, look, if you're renting right now, how much do you need to see interest rates fall before you're seriously going to consider making a purchase of a home? And, we've seen 50 basis points worth of cuts so far. In reality, we need to see, between 200 and 300 basis points for a lot of first-time buyers to move off the sidelines and look closely at purchasing a home. And so, by and large, we're going to really start to see an uptick in demand, at least from first-time buyers, more so as we move into 2025, and I'd even argue more so as we move into the spring and summer market within 2025 versus, say, the first 4 or 5 months. But this just kind of shows that there are a lot of people right now, given high rents that we've experienced over the last couple of years in the GTA and surrounding GTH rental market. It goes to show that there are a lot of people right now that are saying, look, if my rent even went up by $1, I'd be seriously considering the purchase of a home like a condominium apartment, because even if that monthly mortgage fee may be higher than what I'm paying right now for rent, a lot of that, even in this higher interest rate environment, is immediately going to be going to principal. So essentially, I'm going to be investing in my house myself. I'm going to be building up equity within a long-term investment. And so again, as we start to see more in the way of interest rate cuts, you're going to see a lot of these renters that feel they're paying a fairly high rent right now, taking a closer and closer look at that home purchase. And that's really where I want to end off today before we move to the question side. I did see some questions already starting to be typed in, so that's great. I'm happy to talk about different aspects of the market, but I did want to touch on rental. Oftentimes when we think about the Toronto Regional Real Estate Board and the statistics that we're releasing on a monthly or quarterly basis, we're thinking about the home ownership market. But it's also important to note, that we have tens of thousands of rental transactions reported through our system as well. Throughout a given year, and that's both on the single family side, but even more so on that condominium apartment side, that secondary rental market, where we've seen investors purchase units over time and bring them to bear on the rental market. And so certainly it makes sense that average rent growth on this chart has been in the high single digits to low double digits over the last number of years, because but for the investor held supply coming onto the marketplace, we really haven't seen a lot of new rental stock come online. And so with the record levels of population growth that we've seen over the last number of years, there's been real demand for rental accommodation. And so it makes sense up until the second half of 2023 and moving into 2024 that we're seeing strong growth in average rents. Now, that's changed to a certain degree. We've actually seen a little bit more supply in the rental market over the last few quarters, where we've seen the actual growth in rental listings outstrip growth in demand. That's not to say that growth in rental transactions isn't there. It is. It's just that the number of listings available is growing at a faster annual rate. And so that's benefited renters, at least to a certain degree, where we're seeing double-digit or high single-digit growth in average rents last year, and now we've actually seen a bit of a decline year over year over the past couple of quarters. So a little bit more negotiating power for renters in that space as well, at least the condo apartment space, and that's great. And you can see that here if you look at average rents, just as sort of a time series, we have seen a bit of a dip as we moved into 2024, but certainly still high from an historic perspective. And I'd argue, sort of thinking back to those polling results that we saw from the end of 2023, there's still a good number of households that are really starting to weigh more that option of, say, moving out of rental housing and into home ownership. And I think that decision is even going to become more to the forefront as we move through 2025 and start to benefit from A, lower borrowing costs, and B, a substantial amount of standing inventory, especially in that condo segment over the next year or so. And of course, just sort of thinking, finally about demand for rental accommodation, it's not just been on the back of permanent migrants moving into the GTA and surrounding Greater Golden Horseshoe, but also non-permanent migration. So people moving into the GTA and Greater Golden Horseshoe to take advantage of educational opportunities, temporary work opportunities, or what have you. And obviously, the great majority of these households are going to be more focused on that rental market versus home ownership. And so even as we start to see, renters right now start to move more so into home ownership over the next couple of years, taking advantage of lower borrowing costs, it's not to say that all of a sudden there's going to be much more balance in the rental market, because we're still going to be seeing record levels of immigration, and a lot of these households initially choose to rent, and B, we're continuing to see very high levels of non-permanent migration, focusing on the rental market as well. So just sort of a final point, and this impacts both the demand for both ownership and rental housing. We're kind of at that precipice right now where we're sort of balancing, where we are in terms of borrowing costs and inflation versus how that monetary policy has impacted the labor market and broader economy over the last year or so. And while the unemployment rate remains low from an historic perspective, or certainly now in line with historic averages, we have seen an an uptick. We are seeing a little bit more softness in the labor market, a little bit more softness in the overarching economy. And so that'll be the balance over the next say 18 months or so. So while we're starting to benefit from a lower borrowing cost, is that going to sort of feed through into sort of a flatlining in that unemployment rate, even seeing it start to trend lower, which obviously would feed into more consumer confidence when people are thinking about purchasing a home and making those mortgage payments over a long term. And so more and more over the next number of months, it's going to be important to look at that relationship between borrowing costs, how it's affecting the economy, and how that's feeding through into the labor market. Because as I mentioned at the outset of the presentation, you really need to see balance there for sort of a sustained growth in the ownership market. You need people confident in their ability to gain and retain employment over the long term to make those mortgage payments. And at the same time, you need to see interest rates at a reasonable level so people can afford those payments, especially in an expensive market like the GTA, and even more so or growing in the surrounding greater Golden Horseshoe as well. So I'll turn it back to Carly, and certainly I'm happy to answer questions, I guess, to the bottom of the hour.
Awesome. Thank you so much, Jason. We do have a few questions. So from what I can see, there's a question in regards to the 2024 bar chart. And it says, so the 2024 bar chart was data till July.
That was for listings. So what I did, just so we could have an apples to apples comparison, but still looking at it on an annual basis, I just looked at new listings from January to July across that time frame.
Perfect. Okay.
Yeah.
Perfect. And
just as a point too, like if people are looking to access reports on the housing market, if you go to TRREB.ca, TRREB.ca, we have reports going back to the mid 90s in terms of trends and that we've seen in the Greater Toronto area over that period of time, and you can download those reports and what have you.
Perfect. Okay, thank you. The next one we have is, what do you suppose the long-term impact of Mark Miller's changes to immigration will be on the housing market?
Well, I mean, right now, I mean, we're really sort of, having, it's a balancing act, and then certainly from a public policy perspective, I mean, we're having the debate along the lines of, on the one hand, growth and economic development, certainly in Canada and built up regions like the GTA, is driven to a great degree by population growth. But at the same time, you got to have a place for people to live. And we're struggling on that second point, and have struggled over the last number of years. And I always caution, I spoke a lot during the presentation about the fact that right now we're benefiting from quite a bit of standing inventory, especially if you look at that condominium apartment market. But as the housing market starts to pick up, as we start to see more demand for ownership housing, we're eventually going to eat into that inventory. And if we're not replacing it through new home completions over that same period of time, then we're going to start to see the market tighten. We're going to start to see the impact of population growth in terms of more and more competition for given listings in the market. And that leads to upward pressure on pricing. And certainly over time, I mean, we should expect to see the price of homes growing, in sort of the mid-single digits. That makes sense. But the issue is that we've been kind of working through these sort of cycles where, we see a real acceleration in price growth, well into the double digits, because we haven't seen sort of a sustained pipeline of housing supply come online over the last couple of decades. And it's more than just needing to see more housing in the aggregate. It's also needing to see a greater diversity of home types come online, say, over the next decade, that sort of bridge that, that traditional single family home versus, condominium apartment space, more plexes, more, stacked towns, that type of thing that allow people to sort of move up and, eventually down the housing continuum to, always have the type of housing that, that meets their needs. And so on the one hand, we have policy around immigration that's seen record or near record levels of population growth. But on the other hand, we really need to see, a lot of the good policy work that's been done around housing supply really start translating into more shovels in the ground as we move through 2025 and beyond.
Excellent. Thank you. So I have 3 questions that pertain to the condo market. So, and they kind of overlap each other.
Sure.
So I'll say all 3 of them, and then hopefully we can get some answers to answer all of the questions. So
that sounds good.
So although the condo market is currently better supplied,
yeah,
but we know that population continues to increase, how do you see population growth specifically impacting the GTA condo market? That's 1.
Yep.
Also, to add to that, can you make some specific comments on the condo market about inventory, how you see things going for the next couple of years? And the last piece of this question is there a pricing and sales difference between general condo market and luxury condos?
Yeah. So I think that, as the basis of our population growth is immigration, and initially, a lot of these new households are choosing to rent, and a lot of them, as we saw from the map, within the city, Toronto, and Peel region. So insofar as those people would be looking to move into the home ownership market out of rental, it would make sense then that they'd be focused on the condominium apartment market, at least initially. I mean, that is the entry point for a lot of first-time buyers. And so it's true. Right now, there's a ton of inventory. We've seen investors, choose to list their units for sale in greater numbers. And I think, as we start to see the market tighten up a little bit, you may see even more listings because people will be looking to take advantage of some initial, price bumps as well. But what that'll mean is that, we're going to see a combination of lower borrowing costs and fairly high inventory, at least over the next 18 months or so. And so people will be able to, relatively speaking, take advantage of prices that remain below what we saw, say in 2021 and the first part of 2022. My concern, though, and this gets to the second 2 parts of the question, is that, we haven't seen a ton of new home sales or pre-construction sales, and this has been well documented as well. Certainly, if you're reading the media as it pertains to the housing market, there's not a lot of pre-construction sales activity right now, and that's really sort of the start of the pipeline. And so, historically, what you needed to see was relatively tight conditions in the resale market for condominium apartments to start to drive people into pre-construction sales centers, and we're not seeing that right now. So the problem is that starts to lead to a delay in new projects starting, and you're talking about somewhere in between, it can take between 5 and 10 years for a project to go from a pre-construction sales state to keys in hand. And so we're going to need to see also an uptick in pre-construction sales to make sure that we're starting to see more inventory come online. And therein lies sort of the rub here, that on the one hand, we're seeing very strong population growth, which we need for the economic development of our region of the country. But by the same token, it's a struggle to bring online new housing, whether we're talking about condominium apartments or single family homes or anything in between. And my fear is that if more and more people who are looking to move to Canada from other parts of the world say, look, we'd love to move to Canada and specifically the Greater Golden Horseshoe, but we're not confident we're going to be able to find affordable housing, whether that be in the ownership market or rental market, they're going to start to look elsewhere. And that elsewhere may not be in Canada. It could be, in other parts of North America, the United States, or other parts of the world. And the problem is that once you start to lose that inflow to other parts of the world, it's tough to get it back. And so again, I mean, credit where credit's due. The federal, the provincial, and local governments have really committed to making policy changes that would hopefully bring online more housing. But we need to start to see more shovels in the ground. And I think you'll start to see more interest in the new home market as resale market conditions tighten up. But we're probably looking towards the end of 2025 and 2026 before we start to see that translate more so into people taking closer look at pre-construction sales centers and what have you, especially in that condo space where there is a lot of inventory right now.
Excellent. And also, sorry, did just touch on like the pricing and sales difference between general condo market and luxury condos?
Yeah, I mean, the luxury space is a little bit more, niche if you're talking about both in sort of luxury locations, but then also, sort of larger units. I think it's almost sometimes sort of, very sort of micro location dependent or even project dependent when you're thinking about sort of the demand supply sort of dichotomy or relationship for that type of unit. I think the other thing that's important to recognize as well is even if you have larger units, 1,500, 2,000 square feet, which are generally found more often in these sort of larger, luxury type developments, there is sort of a difference in terms of the pricing on a per square footage basis between, say, a traditional single family home and a newer, concrete mid-rise or high-rise. It's expensive to build concrete. It's expensive to build units of that size. And so, people that are thinking about, say, selling their existing single family home, maybe more aged households, and into sort of a quote unquote, luxury or above average condo apartment, they'll see that there's not that much gap there, and maybe you're not putting as much in your pocket in terms of parlaying equity that built up in your single family home and moving into that luxury space. And so it does prompt that sort of decision making process, and maybe just sort of moving off luxury and just thinking about large condominium apartments. There's often this complaint that it's difficult to find large sort of family size units. Well, part of the reason is that, again, they're quite expensive if you look at it on a per square foot basis. And so, in a new concrete high rise, see 1,500, 2,000 square feet, that's cost prohibitive for a lot of families, and indeed is in line with, what they might pay for a townhome or a semi, especially when you start to build in, monthly maintenance fees and what have you.
Excellent. Thank you so much for that. I think right now I have two more questions. It says, you spoke about a growing shift towards municipalities surrounding the GTA, proper in recent years. Do you foresee a scenario where we would see a resurgence in the city of Toronto and other traditional GTA municipalities?
Yeah, I think it's a really good question, and it's interesting, taken through the lens of the pandemic and sort of changes of live-work relationships that we've seen over, let's say since 2020, because obviously the lines are a little bit more blurred around sort of living close to where you work and commuting times and what have you. And so, I do think that, if you think of the traditional downtown core, like in the city of Toronto and other sort of, say, higher density nodes like in Peel region and York region, I still think that people do see the advantage of sort of living in those areas to, be closer to work or take advantage of, the various, public opportunities, parks, shopping, what have you, that exist. But I think, in terms of whether you see more of a resurgence in the downtown, I think also depends on what we see on the commercial side of the market. So, right now, what is going to happen in terms of the demand for office space and use of what we call, I guess, traditional office space. What's going to happen in terms of the retail environment, in terms of people, visiting bricks and mortar shops versus, buying online. And so, people have a lot more options now. And I think that dictates, whether or not they need to be in sort of traditional cores or not. And I think that's, one factor that, thinking about that movement and seeing a higher share of transactions outside of the traditional GTA proper. I think, there's more and more people that are comfortable now living a little bit further afield than they otherwise would have.
Excellent. Okay, so I have actually a few more questions have popped in. This is more so, I mean, it's been definitely something that's been spoken about in the media and talking about the housing shortage and crisis. The colleges have been significantly impacted due to the housing crisis, and they wonder how this could ever be solved. Do you have any thoughts on that?
Yeah, I assume that's sort of just speaking to people looking to come to the Greater Golden Horseshoe and take advantage of post-secondary education opportunities, yet they need to find a place to live, and part of that sort of non-permanent migration spike that we've seen over the last number of years, some of that has been students, people looking to come here and study, and I fully understand the comment. Because if you're talking about extremely tight rental market conditions that we've seen for the better part of the last couple of years, as I said, we've seen a little bit of relief over the last few months, over the last few quarters, but still rents are quite high, and so it's not unlike the comment that I made earlier. Around, there's a lot of people all around the world that want to move to the Greater Golden Horseshoe to take advantage of all the job and cultural opportunities that exist. Same thing goes for education. We've got a lot of great education opportunities here in the Greater Golden Horseshoe as well. But if you can't move here temporarily to take advantage of that education because housing is too expensive, well, again, you're going to start to look elsewhere. And again, it gets back to economic development because, wouldn't we like to see a scenario where, people could come here initially temporarily, they take advantage of the great education that we offer through various, channels or pathways, as it were. And then a lot of those people stay here and are making a contribution to the economy on a longer term or permanent basis. And so, yeah, like the availability of housing and the affordability of housing is sort of intertwined in on the educational side as well.
Absolutely. Question about the rent increase tolerance slide.
Yeah.
This person says, I would imagine that a renter's ability to put together a down payment would have a major, if not larger, impact on their decision to purchase than whether their monthly mortgage cost is comparable to renting. Was that factor captured in the survey?
Yeah, I think that it is, especially when you look at, if you look at a combination of answers that we saw through the survey. So, on the one hand, there's a lot of people thinking, you know what, I'm paying a lot of rent here. And it's starting to get close to what I'd be paying for a mortgage payment for, say, a condominium apartment, especially when you take into consideration that a lot of that's pointed towards principal pay down over time, so growth and equity. But by the same token, people that have been renting and haven't taken advantage of increasing home equity are also much more sensitive to borrowing costs. And that's why when you ask first-time buyers, well, how much are they going to need to see in terms of interest rate reductions before they seriously consider moving into the market, the most common answers were between 200 and 300 basis points. And so I think that gets back to the point that, because they don't have as much of a down payment, because they'd be utilizing more leverage, obviously they're then more impacted by the level of borrowing costs and how that feeds through into their monthly payment.
Thank you so much for that. We've got two more questions here. Will there be investors who are basically stranded in this high interest market? For example, buying an investment property, less than 400 square foot condo at pre-construction or peak 2022 price and unable to rent out at a market price that breaks even for the investor. Do rates need to go back to all-time lows to justify their investment? Will we scare away this source of rental supply for a good generation?
Yeah, I mean, if you think about the rental market, it's a really good point, especially like the last piece about rental supply, because and we have seen more purpose-built rental construction and completions over the last couple of years, and that's great, but it pales in comparison to the amount of inventory that's been added over the last decade on the back of individual investors. But unfortunately, as it's become more and more expensive to carry this investment, and this is even before we start to see the upward trend in borrowing costs over the last couple of years, just with sort of the price growth scenario that we're seeing. It was getting tougher and tougher to sort of carry that investment on rent alone, right, and cover the property taxes and maintenance fees on top of that mortgage payment. And so we were starting to see a decline into the number of units from one year to the next that were being added to the quote unquote rental stock, that secondary rental stock on the back of investors. And it's a flexible stock, right? It's not like you're building a rental apartment and then forever and ever that's a purpose-built rental. Investor held units in the secondary market can move in and out of that rental space. And I think right now you're starting to see, you're not starting to see, you are seeing more of an outflow. And so it's a bit of a double whammy in the sense that you're seeing an outflow of investors, and that's based on higher levels of inventory in the resale market right now. And on top of that, you're not seeing a lot of activity at the pre-construction sales center. And so, I think in the absence of a real uptick in purpose-built rental construction, we are going to see a bit of a dip in terms of additions to the rental stock in the GTA. And so, while right now the rental market is relatively well supplied, not unlike the ownership market, you are going to start to see that inventory get absorbed if we continue to see population growth at the record or near record levels that it is right now.
Awesome. Thank you so much, Jason. I just have 3 more questions here, and then we'll have to end this around 12:30. Okay. The question here says, it seems that affordability is the main problem and that has not been addressed yet in terms of supply of affordable non-luxury apartments. Any thoughts on this?
Yeah, I mean, it's even though we've seen prices trend lower, to a certain degree, helping to mitigate the impact of high borrowing costs, they certainly haven't dropped off enough where if we're looking at it on a monthly payment perspective, that it's that it's manageable. And so again, it gets back to how sensitive first-time buyers are to borrowing costs, and why a lot of them are saying, I need to see 200, 300 basis points in interest rate reductions to make this move affordable, even given the fact that we've seen a drop off in average prices compared to what we're seeing, say, in the first quarter of 2022. Just the price growth or price decline on its own wasn't enough to mitigate that impact of borrowing costs. And so that's why, I'd be expecting to see, more in terms of growth and demand, especially on the first-time buyer front, as we move into the second half of 2025, as we're getting closer to that sort of 200 basis point mark in terms of interest rate reductions.
Thank you. Do the statistics shown for immigration include non-permanent residents?
Not the way I showed them here. So I basically broke it, and if you go to the StatsCan website and look at the components of population growth, which is a series they have available for different regions across the country, they have immigration. You can net out people leaving the country as well to get it sort of a net immigration number. And then they have a separate net non-permanent migration number as well. And so you're able to see the different components. You're also able to see, what's going on with people, moving around the country. So people say moving from, the province of Ontario to other provinces. You're also able to look at that intra-regional migration. So people moving from, say, the city of Toronto to Peel Region or Niagara or wherever the case may be.
Okay. Are we seeing an increase in foreclosures in 2024 compared year to date compared to last year?
I think certainly if you look, I mean, one measure that people often point to when thinking about stress on sort of the mortgage market is looking at the percentage of mortgages in arrears more than 90 days. And while we have seen an uptick in that number, and it makes sense in a higher interest rate environment, it still remains relatively low from an historic perspective. And so obviously the hope then is that as we start to see interest rate reductions come online or roll on over the next 18 months or so, that would help sort of mitigate that share getting higher, because people's payments would become more manageable, whether they're in a scenario where they're in a variable rate mortgage and they had, say, a payment reset or what have you, or whether they're on a fixed mortgage and they're coming up for a renewal. Then hopefully those payments would be more manageable by the time they hit that renewal period, because we will be seeing rates trend lower. But they're not trending back to 2021 levels. And so people are going to need to account for a higher interest rate environment. One sort of silver lining, I guess, is that we have seen a relatively tight labor market over the same period of time, albeit the unemployment rate is rising. And so a lot of households have been able to take advantage of wage and salary increase that at least helps mitigate the impact of higher borrowing costs. But it remains to be seen, but certainly even with the cuts to interest rates that we should expect to see through 2025, the principal interest payments associated with an average mortgage are going to be certainly higher than what people are used to, say, in 2021 and the first part of 2022.
Perfect. Okay. Right now, this seems to be the last question, unless something comes in, but luxury is a subjective marketing term.
Yep.
Not sure how we could capture that in stats. As you noted, even large condos are more appropriately considered family apartments, not luxury. They wonder if Jason has any data on how much location versus size, age, amenities, etc. drive prices.
In terms of the share of prices or price growth from one or the other, I don't off the top of my head. I mean, we do, for example, have the home price index for most major markets across the country. And it provides an interesting take on home prices, because it's looking at sort of what a benchmark home is in given neighborhoods throughout a region like the GTA or Greater Golden Horseshoe. And so it captures location, it captures sort of what a typical home or typical condo apartment may look like in a given area. There does, of course, tend to be a correlation between sort of location and income and the types of homes that are built and purchased from one neighborhood to the next as well. And so, there's an interrelationship there as well.
Excellent. That's it. I don't have any other questions. I'm not too sure if anyone else has anything that they want to ask Jason. But in the meantime, though, if someone does have a question, would it be okay if they reach out to you?
Yeah, absolutely. I'm always happy
Perfect.
to take questions and discuss the market. It's important because it's important to understand what's going on at sort of ground level and what different stakeholders in the marketplace have to see. And look, and I really appreciate today. I mean, sometimes you do these presentations and talk for 20 minutes or a half hour, and it's crickets. So it was a lively crowd today with lots of good questions. And so I appreciate everyone taking the time to make this more of a back and forth.
That's perfect. Thank you so much, Jason. And since there are no more questions, Jason, I'd like to thank you so much for taking time out of your day to discuss such a hot topic, obviously, in the Toronto region. Just obviously from the amount of questions we did receive and the number of individuals that are on this call, there's a lot of interest to hear from an expert like yourself, just about what's going on in the Toronto region. So thank you so much for that. And this I did see just a note here. This has been recorded, so once we get off the call here, our comms team will be uploading this to our the Toronto Region Board YouTube page. So we will send out an email to everyone and just let you know that the link is live for those who wish to either share it or rewatch it and get maybe some more details that that we missed today. But other than that, I just want to thank everyone so much for taking time out of your day, and I hope everyone has a wonderful rest of your afternoon, and thank you so much for participating.
Thanks, everyone.
Thank you so much.
Bye now.
Bye-bye.